to our Micro Moment Trading podcast every Thursday, 10 a.m. Central Time. And we have Deshaun with us already. We have Randy. We have myself. We expect Tim to show up any moment. Michael will not be here today. He was not able to. So we'll have a good time. I want to remind you to go to our website, www.micromomenttrading.com, and sign up for our free cow report. It comes out every single Friday afternoon, has for over 20 years. And in that cow report, you're going to see emails from our clients and from the folks here answering their questions. And you're going to see how they're doing and what they're investing in and all kinds of stuff that's in that report. It's really helpful. It's, again, Micro Moment Trading. Support micromomenttrading.com. That's the website. Or just www.micromomenttrading.com. And you'll come up with the ability to check us all out, check all the programs we offer and such. And that's in addition to what you're going to find out today. We had a good day today on Micro Moment Trading, which just ended. We were up about 16, where'd it go? 16%, I think. 11.64%. And then we had a carry forward from yesterday, which was not reported yesterday, of about 7 or 8%. So we had a really good day. And we have a couple more reports that are going to be added for tomorrow that come in after we all had to leave to attend this podcast. So let's just start off with Randy. And Randy's sort of in charge of our operation that runs the original traditional covered call and leap seminars, and he still does. And he's made various modifications over the last 15 or 16 years, improved that tremendously, and he makes astronomical returns. You've got everywhere from just incredible leverage to where you can buy stock and just rent it every month, just like you rent rental property. And that's what we do with traditional covered calls. We treat them like rental property. We buy an apartment and we rent it. We don't buy it and hope it goes up in value and we're going to sell it someday. So with that great introduction, why don't you take off? Explain to the folks what you do.
Great. Thanks, Joe. First off, just for those that don't know what a covered call is, Joe kind of touched on it. But a covered call is you buy a stock and sell a call against it. The call gives the right for somebody else to buy the stock back from you at a set price up to a set date. So you're selling an obligation. They're going to pay you money for that. That's the rent that Joe's talking about. So that is your income. So they're going to pay you money. They may or may not end up buying your stock, but you get that money up front no matter what. So you get paid. And you can do that week after week after week. And that's how you generate consistent monthly and weekly income that you can live on or you can reinvest and grow your portfolio. Now, we do covered calls differently than the rest of the market does. We do covered calls to generate the income. The goal is to generate the income and get called out. That's different. So we sell in the money covered calls. That means if we buy a stock for 100, we might sell a 98 call that lets somebody buy the stock from us at 98. But they're going to pay us $8 for that. So if they do buy it at 98, they already gave us $8. We have $106 left over for a stock that we paid 100. That's a 6% return. If they don't buy it from us, we still have that $8 left, and we still have our stock, and we can rent it out again for the next month or the next week, depending on how often that you want to do that. Therefore, the stock can go up, we get called out, and our goal is to get called out. That means we actually get all of our capital back, and we still keep the profit. It can go up, we get called out. It can go sideways, we get called out. It can even go down, and we still get called out. So that is what makes it totally different than how the rest of the market treats calls when they're selling calls against stock that they own. So with that, I teach a coaching service that teaches more in-depth process of how that we do the covered call. So Joe teaches the 2-day seminar on a weekend. We just had one last month, probably another one coming up sometime next month. And that's how you learn the basics of all the Joe's way of doing the covered calls. That's the generating income on a weekly or monthly basis without speculation. So we're not looking at something saying, oh, I think this one's going to go up, so I'm going to buy this one. We look at it to say, this is a good position that meets all of the requirements, and it's all a set of rules. It's all rule-based. You learn the set of rules, and you follow the rules for what stocks to buy and what calls to sell. If the stock goes down substantially, we still continue to what we call manage that stock. We have a separate extra set of rules to handle if it goes way down. And we continually generate income on it while we're waiting for it to come back up. So on Wednesday, every Wednesday morning, I hold a live in the market coaching webinar that supports the covered call process, but in addition teaches a more advanced covered call process. I call it synthetic covered calls. And instead of having to buy the stock, I buy an option that allows me to sell an option against it. And therefore, it uses a lot less capital. So there's a substantially less capital at risk in the market and still being able to generate great returns. And as Joe would say, it leverages your capital by not having to buy the stock at 100. You might buy the option at $10 and still be able to sell that 100 call and get that $8 of income off of it. You're never borrowing any money, but you're putting less capital out into the market. So you have less money at risk in the market. So during that service, I use live positions to teach with. So I teach you how to do all the processes. And then when I find a position that meets all my requirements and I'm getting ready to enter that position, I send an email out that says, hey, this is what I'm getting ready to do. So you get to watch over my shoulder, really see step by step exactly how the process works in real time, live in the market. Now, the intention of that is for you to follow along in your virtual trading platform so that you're not going to risk any money while you're learning the process. But you get to see step by step by step exactly how all the rules are implemented, how the positions are managed, and what the outcomes are. And you get to see exactly how it is in the market. So it's not just a, oh, this is what you could have done a week ago, or here's what it was last year at this time. These are actual current positions going in the market. Last week,
I think one of the key things in your technique, along with the micro guys, is that you do nothing to speculate like 99% of all other investors in the stock market do, trying to figure out if the stock's going to go up or if it's going to go down. You don't do that at all. All you want is a stock that hopefully it's not going to go out of business. If it stays in business, you're going to always make anywhere from 5% a week to 5% a month on that stock. Go ahead.
Yep. So the positions that I implemented last week and I sent out to all the clients that are subscribing to the service, did Alibaba. Now, Alibaba is like a 230, I think maybe up to 270 or 280 now, that most people can't afford to buy that stock. I entered it and closed it out, 13.1% return. I only had $2.20 per share invested in Alibaba and all money back plus 13.1% return in less than a week. Carvana, another $200 stock, 31.1% return, only $1.83 per share invested. QQQ, which is the ETF for the NASDAQ 100. And of course, the NASDAQ is up like at 12,000, and the QQQ would be like 293 right now. 11.1% return, only 90 cents per share invested. TLT, which is actually a 20-year Treasury bond ETF, 14.8% return, only $2.13 per share invested. IWM, the ETF for the Russell 2000, 11.1% return, only 90 cents per share invested. NVIDIA, another 4 to 5, I think it's over $500 now, 14.6% return, only $2.18 per share invested. And Target, 19.2% return, 83 cents per share invested. All of those were for a week or less of actually being invested in the market. So that's the only time that the money was at risk on those positions was less than a week. Every new position that I entered last week was successfully called out by the end of the week. And that's what I want to have happen, because then I get all my money back and lock in that great return. Now, one of the positions that I entered this week already, on Monday, I entered a position on Salesforce.com, CRM. I closed it out yesterday. I already closed that position out. I entered it on Monday, closed it out yesterday. I had $2.35 per share invested, and it closed yesterday for 5.9% return. Only 2 days in the market. 2 days of investment, 5.9% return. All that capital is back. It doesn't matter what happens to the market. It doesn't matter what happens to Salesforce.com. It's all done. And so I have more positions that are in place this week, and all of them are in the money right now. Then I always say that with knock on wood. You never know what the market's going to do. But by following the rules and selecting good, solid, quality positions, you can see that none of those positions that I got in were of those kind of speculative names that almost fly-by-night companies. There's no Nikola's that people are invested in because they have the hopes of an electric vehicle. They've never even put one part together yet, and they're already out there with an IPO, and who knows what they're going to actually end up. We don't do those types of things. We enter in good, solid, quality equities, companies that are going to be around for a long time, that have been around for a long time, and to be as conservative as possible in this really wild market these days. You never know where the market's going to go from minute to minute.
I think when you subscribe to Randy's service, I mean, you're getting his trades. You're over there doing them virtually, and you're hearing him talk, and you're seeing the charts he's using. He has special seminars just on charting and all kinds of stuff related to that technique, and you just learn. And because of the wonderful thing about virtual trading, and practically 99 9/10 of all trading platforms, is they'll give you about 80, 90,000 bucks, and these are real. These are not real trades, but they're real data. And so, if you're successful with that, at any moment, when you feel comfortable and you feel like you know what you're doing, just switch over, and all of a sudden you're making tremendous amounts of money. $2,000 in one of Randy's laggards, and certainly in one of Micro Moments laggards. If you just made 6% per week, $2,000 invested one time, never again. You just keep reinvesting the money you're making on it. You only get 6% a week. 6% a week. Randy, when have you had something that you just get 6% a week? Not very often. Much more than that. In 24 months, you're going to have somewhere between $500,000 and $600,000 because of compounding. Never invest in another cent. Never, ever. And so get extremely wealthy. And just takes a little diligence and just follow it. Randy has a lot of rules. He has rules because he's dealing in stocks and leaps, which give you the incredible leverage. And he's making money regardless of what you pay for the stock, going up, going down, going sideways. And a lot of people love that. They have stocks they inherited from their grandmother, and they don't ever want to sell them. But instead of just collecting dividends, which are probably at most going to be 2 or 3% a year, they can make that in a week, and never risk the position of losing the stock, ever, never, under any circumstances. And you can learn all that stuff doing Randy's stuff. And
Joe has like an example of that, because some people like Warren Buffett own like Coca-Cola, right? That's especially down here in the South, in Georgia, a lot of people have Coca-Cola. Some of them, their grandparents gave it to them, or they've had it in the family for years and years and years, and they just never want to sell it. Well, I have Coca-Cola in the portfolio, and so we're doing what you just talked about by selling an out of the money call, so we don't get called out, but still generating income every week while you're still waiting for the dividend. So a lot of people just own Coca-Cola because they want to just get the dividend every quarter. Well, while you're waiting for it, you can make money every single week on that stock. And like an example this week, Coca-Cola, I just sold a call for 11 cents a share. Now you may say 11 cents a share, not a whole lot. If you earn 11 cents a share every single week for 52 weeks, that adds up to a lot of money, and you're still getting the dividend every quarter. And that's for people that just don't even want to sell the stock. They don't want to have an outcome, either because it's sentimental to them, or they don't want to pay the taxes, or they just like having it so they can earn the dividend on it. We have that technique. We call that a weekly fast cash.
So much has changed since Randy and I, we've been doing this together for a long, long time. And a long, long time ago, the trading platforms were really bad. You had dial up, you didn't have modern stuff. It'd take forever to do a trade. And we were trying and happy to make 3 or 5% a month. And over all these 20 years, the CBOE, which kind of gives the rules for this stuff, every ruling they've made has enhanced the kind of stuff we do. Every single one of them. There's never been anything detriment. So trades have gotten better. Commissions have gone to virtually zero. So now we go for 3, 4, 5% a week. And that's his normal trades. Those aren't even micro moment trades. He has sort of a version of micro moment. We call it the old man's micro moment. And it doesn't get out in 15 or 16 seconds like these two wild guys at the bottom of the screen here. But, it gets out in sometimes 15 or 16 seconds, but more likely 2 or 3 hours or 2 or 3 days. And so you've got something, for everything. And he's been doing it a long time. And all these special seminars that he does just are incredible. So it's good.
And those training webinars that I do every week, we record them as they're live in the market at the time, and you can attend them live, but they're also being recorded so that you can watch them later on. So either you can not be able to attend and you can still benefit from the training by watching it later, or you did attend and you still say, wow, that was a lot of training. Let me review that again. And you can watch them over and over and over again so that you can really absorb all that training.
Yeah. Okay. Now, hey, Tim, glad you're here. Everything going okay, Tim? Tim's so intense. Okay. That's how Tim is. He doesn't hardly speak to you. Hey, Tim, how you doing? Oh, there he is.
I'm doing well. Guys.
He's the laughing guy. John popped up a message. Oh, by the way, if you want to ask something, see, like John right now is asking a question of Randy, and we'll get to that in just half a second. But just type in what you want to ask. And also, Randy, do you have any of those seminars delayed, obviously, on YouTube for somebody can watch one, or they just all?
Not yet.
Okay.
Micah's not. He's been working on the micro moment trading ones right now. So once he kind of gets that under control, I think we're going to put some cover calls up there.
Yeah, and we've got on YouTube anytime put in micro moment trading, and you can see several day olds because you can't really trade on, but you can see exactly precisely what Tim, Deshaun, and Micah teach and how they do it. And you in fact, you see a complete hour. First session is 1 hour, 8:30 to 9:30 Central Time. Sometimes they come back for a second afternoon. So, okay, great. Okay. Have you already done some deals, Tim, while you're sitting here during this podcast?
Yeah, doing a deal. And one now.
Did what?
Yeah, I'm in one right now.
Oh, okay. I don't want to bother you. Sorry. Let's move over to Deshaun.
No, it's all good. Let me get out of this here.
Yeah, your audio is kind of bad there, Tim.
Yeah, your connection is really spotty there, Tim. You might want to log out, log back in.
And your picture
is that any better?
With the voice is
that any better?
Oh, that's perfect. Yeah. Okay. And also your video is not jerking around. So anyhow.
Yeah. Okay. There he's back. And I just want to throw one thing in real quick, because I do all the types of trading that we've taught over all the years, and I do micro moment trading just about every day. So I also already entered a position, Tim, and you'll be impressed. It was only 49 seconds from the time I entered it till the time I closed it out, 2.6% return. That was just before our webinar began today. So
nice. Nice.
I don't even have to trade anymore on the micro moment trading. I've already got 2.6% return for today. So I'll wait till tomorrow and do some more.
Yeah, there you go. Remember what I was saying about just 6% a week? Well, you got a third of it right there in A minute, less than a minute.
49 seconds, Joe. Don't stretch me out and make it sound like a long time now. I know you always try to say that I'm slow, but that was 49 seconds.
It's slow compared to these guys, Deshaun and Tim and
I know they do it like in 28 seconds. I got 49.
No, very seldom. They pass 20 seconds. Probably that'd be a long one.
Yeah, I see that push down that you grabbed. Very nice.
Yep.
Very nice. Very nice. So, my turn?
Yeah, sure. Go ahead.
All right. Well, hey, everybody. I'm Tim, of course. And we do we're on the other side of the house. We do micro moment trading, and our trades are very fast, obviously, anywhere from 10 seconds to 30, 45 seconds. Our trades have been becoming increasingly shorter over this year due to volatility and market conditions, and it's made us needing to be a little faster on our toes these days. But what we do is we look for very short changes in direction, and we trade on momentum for that leg, and we look for specific setups that reoccur daily, many times a day. And we trade those short turnarounds, those short resets in the market. We really don't have many rules. If we had one rule, it would be when you see it reverse, get out as quickly as possible. Our game is about maximizing profits and minimizing losses. And if you master minimizing losses, you'll be a success with micro moment trading. And that's all there is to it. I can teach you how to do micro moment trading, and
let me say this: when he's talking about losses, Randy, who's goes all the way back to actually bought stock days, those kind of things. He has lots of rules because you're actually buying a stock or you're buying a leap or whatever. He's got a lot of rules because that technique, you plan on staying in it longer, and so it's a lot of rules. So you don't lose money. So you always make money no matter which way the stock's going. These micro moment guys have no rules. They do have one rule. They have no manual. They have one rule. When you see that tick turn green, you turn red, you get out of it just like that. And you may be back in it a minute later. But that's the rule. And that's what they excel at. And when you subscribe to their service, there's a chart there. And you see it. It's our proprietary trading chart. And you learn from that. They teach you how to know exactly and precisely when to go in and when to get out of a position. And that's all there is. It's just that way. And they're only trading, they're not going out there saying, hey, here's a stock. Like yesterday, a stock came on the market for the first time in Europe, and it went public in Europe. And last year, they lost $500,000. 500 million bucks. Now that's, you have that kind of crap on this kind of stuff. They play QQQ, they're playing SPY. These are huge ETFs and stuff. And they're only in a few minutes. Randy's essentially doing the same thing. Randy had a question, and we just ignored it there for a moment. It popped up, and I didn't. There it is, John. Why don't you take that question, Randy?
It says, Randy, what kind of losses do you experience? If you're talking about covered calls, John, if the company goes out of business, that's when you have a loss. Otherwise, we just keep renting that company. And again, that's why it's critical on the quality of the company that I enter. So you just can't do it on any old stock that you want to go. I would certainly not be doing a covered call on one of the airlines right now, or one of the hotel chains, or just things that just don't have a good business going. It's the selection, following the rules, selecting the appropriate positions. That's what increases the probability that you're going to get called out. And if the company goes out of business, so if I heard today talking about more stimulus for the airlines, and some people are saying, well, the shareholders need to all be wiped out so that the taxpayers can. Well, yeah, if they do like a General Motors back in President Obama's days, where they wiped out all the investors and started all over again, then you would have a loss because there's nothing left for you to keep renting out. But as long as that company is staying in business, then we just keep renting the stock out until we finally close it out to exit with all of our capital.
Yeah, but Randy, John's question is even more specific. What kind of losses do you experience? How many losses have you had?
I can't remember the last company
There you
that
go.
went out
There you
of
go.
business.
Yeah.
I do remember way back in 2008, which is before I even did the synthetic cover calls, but Countrywide Mortgage, which was one of the high flying. I mean, it was just the best stock.
Yeah.
The chart was just going up.
Yeah.
And all of a sudden, of course, we had the mortgage crisis. They didn't actually go out of business, but Bank of America bought them for like $1 a share or something like that. So I still have that Bank of America position going on, trying to get it back up to where Countrywide was. But
Yeah.
but that, I think that's the last one that really comes to mind of a company that kind of went by the wayside.
Okay, then let's take Eric's. There's Eric's. Reggie, why don't you get that one?
Said Randy, do you recommend taking the advanced charting course before your spreads course? Said he's already taken the covered calls course and the micro moment seminar last year. Great, that you're on your way to learning a lot. The advanced charting seminar, which we're going to have one coming up in a month or so, that is a proprietary charting package that Joe's put together that uses 21 technical indicators all rolled into one chart, and we teach a really easy to learn and then easy to understand way of reading that chart that enhances your decision process. So when we're looking at a position, we look at what the chart is doing in addition to fundamentals about the company. And if you just have a line chart, just a regular line chart, then you can only have so much information to make your decision on. But with advanced charting, it gives you so much more information to really tell, is this a really rising trend, a rising cycle, new momentum increasing, or is it on its way down? So taking advanced charting is going to help with all your decisions with any of the techniques that you want to use out there in the market. It's also a good starter for those that want to learn the micro moment trading, because micro moment trading, you're reading a similar but not the same chart, but you're reading that on a second by second basis to make a decision. You got to make decisions in seconds. With the advanced chart, because covered calls don't go away in seconds, they last for a week or a month. You have more time to read it, and you'll learn how to read it, and then you leverage that learning onto doing it a lot faster with the intraday streaming chart on micro moment trading. So I recommend that everybody takes advanced charting once they've kind of mastered one of the techniques, because I don't recommend that you try to learn three things at the same time. Concentrate on one, get it under your belt, fully understand it, and then go on to the next one.
Deshaun, why don't you take that one by says Tim or Deshaun?
On trade session, I get amazing favorably filled on both entries and exits on paper when I'm using Thinkorswim, not favorable with their virtual trading. Is this normal? Yeah, I would say it is normal. What I would just recommend you do, Eric, is just, regardless if you're getting favorable fills, TradeStation, E-Trade, Thinkorswim, Interactive Brokers, whatever, just mentally either take a note or write down the entry numbers that you actually use. That way, when you do go to live trading, you won't have any drop off, because granted, trading live, every now and then, maybe 1 out of 10 trades, I'll get a favorable fill. Otherwise, it's just regular fills. So you want to kind of practice how you play. Get that answer.
Yeah. Randy, why don't you get those? You got two questions by Al there.
Al says, I lost on a cover call several years ago on a coffee maker company that merged into Dr. Pepper. I didn't have a positive call out structure, my own fault. I think he's a merger. Then you get stock in the new company, and so then you just keep managing that stock. So then you start selling calls against that stock. You don't have to close out an old position. It just moves over to the new one. So yeah, we teach how to handle those situations. Things coming up next week. Apple's going to have a 4-for-1 split. Tesla's going to have a 5-for-1 split. And so you don't actually lose those positions. They just become new. and then you continue to manage those and generate income on them. So, yep, you can learn the processes and you can get coaching now, especially for those that have done the cover call process for a while and you just want to kind of hone your skills better. I teach a webinar on Thursday evenings that concentrates more on that traditional cover call with the buy the stock, sell the calls. And it's a good place when you're just starting. It's a good place to learn, but also when you're still on your journey and you just want to get more teaching, you get to ask questions live, real time. You get to see the charts. I go through the processes step by step, analyze your position, say, here's where you stand, here's what the next steps are. And you get to see that every Thursday night. And it's a good way to keep getting coaching on the covered calls.
Okay, thank you, sir. Deshaun specializes in SPY on the micro moments, and Tim specializes on QQQs. Now, they could change occasionally. They'll do a Microsoft or something like that. But it's really important. Deshaun, why don't you kind of explain the importance of just doing one stock?
Well, so I could just answer that for me. So is it like doing one stock in our technique? It's kind of like if you have kids, kind of like raising kids. Like you'll find they have their own personalities. They act a little different, little quirks about certain stocks. And for me, I trade strictly SPY. So all we're doing is looking at patterns over and over and over again. So I start to be able to read the patterns of SPY kind of before they happen. A lot of the time, just based on what happened leading up to the pattern. So you get more familiar with that specific stock, and it's just for your overall performance.
Yeah, and it's good to say at this point, Deshaun, they just had their first son, have a little baby son, and he's learned how important this is, using the same stock over and over and getting used to these kind of things that you can interpret what they're going to do. That's why Deshaun has now decided to put the kid up for adoption.
Congratulations.
Randy, what is a synthetic covered call from John?
Well, John, what I call a synthetic covered call is that instead of buying the stock to sell the call against, and that's what makes it covered. You see, if you just sell a call out in the market, that's the most risky thing you can possibly do. You're really speculating if you're just selling calls because you have unlimited loss potential. A covered call says, I'm going to sell that call, but I already have the underlying position that if I get called out, I know exactly what's going to happen and I've got it. So the traditional covered call is you buy the stock and sell a call against it that gives somebody the right to buy the stock back from you. If they say, I want to buy the stock, you've already got it. So you already know that outcome. What I call a synthetic covered call is instead of buying the stock, I buy an option that gives me the right to buy the stock. And then I sell a call against that. So if I get called out, I simply exercise my call to buy the stock and then sell the stock to those that called me out. And therefore, I don't have to invest all the capital up front. And that's basically what it is I'm only putting like a down payment on the stock. And then I can rent it out just like I owned the stock right outright. But I know the structure. I know exactly what the outcome will be if I get called out, what the income will be, and if I don't get called out, what the income will be. So it's still covered, and therefore it's not that risky position of just selling a call out there out of the middle of out of the blue.
Now, Al saying on Thursdays, do you allow us to sneak in a question about modified, I guess, CPR trades and positions? I guess you're addressing that to Randy, but you can ask a question now, or I guess on Thursdays. But if you want to ask a question now, you can do it now.
Well, no, on the Thursday evening coaching, I started that coaching a few years ago for two main purposes. One is some people aren't available during the day on Wednesday. They might have a full-time job. I used to have one of those, and fortunately I was able to retire after 31 years. And so I said, let me do one on Thursday night because maybe some people might be able to be Thursday night and be live instead of just watching it on the recording. That one I also focused on that traditional buy the stock, sell the call, and going through all the techniques that are taught on the seminar. But because there's so many people that also view it, that are learning the synthetic covered call process, I also then, like the back half of the webinar, I go through the questions that people have on the synthetic covered call. So, yep, you can sneak in a question. It's okay.
And Randy mentioned that he was with the company 31 years. What's amazing about this technique, and like that example I give about $2,000, Randy was with the company for 31 years and an executive there, and they offered, like they do many times, buyouts or whatever. And so there were several of them, and he was the only one that was able to take advantage of what the company offered. In other words, he would have had to stay and work there, right? The only one, according to all these financial advisors, that the company brought in, because he had that stock, and he learned not too many weeks before that was offered how to make money using our technique on that stock without him selling the stock. And to this date, he's never sold that stock. And can you imagine what he's been retired now? 15, 16, 17 years?
2007, 13 years. It's gone
13
fast.
years. Every week he sells calls against that stock that he's owned all the time. You talk, he's probably gotten his money back a number of times. But he was the only one because he knew this technique, just like Deshaun knows this technique, Tim knows this technique. If they came with similar situations, they're so above everybody else in the marketplace. It just acts incredible.
I wasn't the only one, but a small percentage, because most people looked at it and said, I can't live off of the money that's left.
Yeah.
And so of the people that did take that early retirement, a good percentage of them did it because they wanted to go pursue some other career, like they wanted to be a teacher or, be able to volunteer at their children's school and things like that.
People that had gone wrong in their lives.
Exactly. Yep. Yeah. But the majority of people said, no, I can't make it on that. I got to keep working.
Okay, we got to talk to Tim. Tim, I've kind of been avoiding you because of your shifty eyes. And you're down there doing trades and stuff. Why don't you tell people
making money,
how you got into
money,
and how this has benefited you? And let me repeat this one more time. When you subscribe to these two guys, Deshaun and Tim's service and Micah's service, you can see those put in micro moment trading and YouTube, and there's sessions in it last the entire, and you can see exactly. They're not going to help you trade because these are past trades, but you're going to see how you learn it. You're going to see how you learn it. Go ahead, Tim.
Sure. Yeah. For me, I've been doing this now for a little over a year now, but I got into this about 6 years ago. For some reason, I received the Cow Report or looked it up. I somehow came across that and started tracking the Cow Report at the results that you guys are getting and just going, wow, it's amazing. And then the company started the subscriber-based MMT, which is what myself and Deshaun and Micah do, and started seeing the results they were getting, which was 100 plus a week percentage returns on that. And shortly after that, threw some money into an account and signed up for the service and started trading.
Let me give you that exactly. This Friday ends the 69th week. Now, before we've been doing this, 3 years or so. 69 weeks, that's when it became a subscription service. It wasn't just us doing it for our own account. And it's average per week, 91.94% every week for 69 weeks. Go ahead, Tim.
Yeah. So got involved in it, started trading. And, after a week, I was an expert in micro moment trading, knew everything there was. And soon after blew up my account and decided that I didn't know everything there was. Started listening to these guys, Micah and Tony specifically, and learn the technique, learn the patterns, and I was soon making consistent money, good consistent money, and then had the opportunity to step in as an instructor, basically as a fill-in instructor, and have been doing well ever since. It's a very simple technique. Like we said, we have one rule. We trade fast, and we're in cash probably 98% of the time. We're in cash, and it's really quite simple. You guys are talking about 6% returns. Well, we get 6% returns on single trades in a day, and we're doing 8 to 12 of those a day. it's not unusual for us to do 20 to 35% returns a day. And when you compare that to what's going on in most IRAs, of course, they're better now, but we blow that away most days. And if you follow our technique very closely, your losses are very small. Your profits take care of themselves. We typically, do 1 to 5-6% returns per trade, and we're doing that multiple times a day. The cool thing about what we do is, besides the fact that we're in cash 98% of the time, is that the technique works. And I'm sorry, I just lost my train of thought there. I was looking at a trade. But anyway, it works if you follow what we're doing. And so much of what we do is about pattern recognition. And our ICE charts, our proprietary charting system, has just tremendous power behind it. And the algorithm is so complex, I can't even begin to explain it. But it gives us insights into upcoming changes in momentum. And when you learn to read those signs with the charts, you can be very successful with this technique. And that's it. That's kind of all there is to it.
Yeah, and what's interesting is that, like last Friday, August 21st, they had 12 trades for a total of 32.1973% gain just that day. There was one Apple trade. I don't know how that one got shot in there. It was an oddball. But there was SPYs. There was 1, 2, 3, 4, 5, 6, 7. And on QQQs, there weren't too many on that day. There's 1, 2, 3, I think. But then the next day, QQQ. So it just goes back and forth. It's really a lot of fun, and we're nearing our time limit here. It's 10:42, and the Marcus, our engineer, who you don't see right now, will kill me if we go over that time period. So, guys, I want to thank y'all. I want to thank the people. Great questions, and so just fantastic questions. Appreciate all of you, and don't forget that we'll there's seminars every day. And check them out on YouTube. And you can also wrangle Randy into some deals sometimes when he's not obstinate as he is since he's gotten so old. But thank y'all very much. Thank you guys. I appreciate your time, and we'll see everybody tomorrow. Thanks. Bye-bye.